Hey guys, what's up? It's Benny here. So I'm going to be comparing two of my favorite companies, Subversive Capital versus Planet 13. These are both in the MJ business, and I want to compare them to see what's the better play in this industry. I think they're both great plays, but I'm going to be projecting their revenues out over the next 5 years and see what can give you the best return on your money. I'm also going to be going through a little bit of a brief overview of both of those companies for those of you who don't know who Subversive Capital is and who Planet 13 is. So I'll do a quick overview, and then we're going to be getting into their financials, and I'll project it out and see what kind of return on our investment we can make. But before we get into this video, make sure to drop it a big thumbs up. It really helps out the channel. And if you're not already subscribed, well, please feel free to do so. I cover stocks almost every day of the week. And make sure you check out that Webull link down below in the description. If you sign up with that link and deposit just $100, you'll get 4 free stocks. Now, with all that being said, let's dive straight into this. So the first company I want to do a little overview over is Subversive Capital. This is actually still a SPAC. It's trading at about $10 a share, so it hasn't increased at all since coming public. And they're going to be merging with all of these companies essentially to form what is called the parent company. So this is a very dominant play in the California market right now. You got Khalifa and Left Coast and all of these companies forming together to make one giant superpower in this industry. Right now, they're all based out of California, but they're going to be moving into other markets as well. So I'll show you what I'm talking about with that. So the parent company, we're the largest C company in California by revenue, integrated vertical footprint, brand portfolio, and balance sheet. These guys are a monster. They're going to be taking California by force. Trust me. And funny enough, they have Jay-Z as their chief visionary officer. Now, what this basically is Jay-Z is going to lead our brand strategy, culture influence, and social impact. So one thing I love about this company is that they're focusing on the brands. So by building a strong brand, you can increase your margins substantially. And you can't think of anybody better than Jay-Z at this. This is something that financial education, so Jeremy over there, talks about with Planet 13. He loves that Planet 13 is building brand awareness. Well, in my opinion, this company is going to blow that out of the water because they have Jay-Z at their hand who's building this brand. And if you guys don't know, Jay-Z is in charge of Roc Nation. So what Roc Nation is that they're a premier global entertainment company founded by Jay-Z. They represent 150 top artists and 125 top athletes, 1.4 billion combined social media followers, and 136 billion potential media impressions in 2020 alone. This is so powerful for brand recognition. I don't think Planet 13 can touch this, in my opinion. I think this is a huge X factor that is really undervalued. I don't think people understand the potential in this company, and it's super easy to project their share price out in the future. And so that's what I'm going to be doing for you guys. And if we look here, so California is the largest and most influential C market in the world. By 2025, it'll be 7.4 billion in annual revenue. So that's an important number to keep in mind because I will be doing projections off of that. And this market is expected to grow at a compound annual growth rate of about 20%. So it's growing really fast, and this company is a dominant leader in this market. And they do have plans to expand nationally. These 3 states here, they will be expanding into. And if you combine the 3 together, by 2025, they believe there's going to be about 8.9 billion in legal spending. So if you combine that with the 7.3 billion, I think, in California, it's about 16 billion annually revenue is the total addressable market by the year 2025. So keep that in mind. That number is important to note when I do my revenue projections. And they are expected to grow really fast over this next year. You can see here in 2020, it's about 185 million in revenue. Next year is 334, year after 593. So they're growing around 80% year over year. And I think this is actually really realistic for the first few years of this company. Now I want to move on to Planet 13, quickly do a little overview on them, and then we're going to get into the financials. So Planet 13 is a massive green company in Las Vegas. They have this huge superstore, and it's really interesting. I'm hoping most of you guys are aware of them. If you aren't, well, you better Google Planet 13. It's totally unique, and it's a concept that is actually becoming proven. And that was, I think, the main concern of some people is like, is this concept actually going to work? And I think they've proven that. So let's get into this. So their Superstore, C Entertainment Complex, 1 million plus visitors in 2019. And right now, Planet 13 has about 9% of the total addressable market in Nevada, and they're expecting to keep it between 8 to 10% over the foreseeable future. And in this slide, you can see that Planet 13 is located just off of the strip. So make sure you comment down below. Let me know if you guys have actually gone to Planet 13. From what I've been told, it's a really good experience, and people have generally really good things to say about it. It's got really good reviews on Google, and that proof of concept is a really important thing when you're investing into a growth stock. Proof of concept and ability to scale. Those two things are so important. I love that Planet 13 has that proof of concept basically down now. They just got to show us that they have the ability to scale and that that concept is going to work outside of Vegas. If they can prove that, this company has a long ways to grow. And they have several ways to generate revenue. So in these massive superstores, they have coffee shops, restaurants, experiential in-house production that you can watch, event spaces. There's different games and entertainment they have within this superstore where you can spend your money. And I think this is going to account for about 10%, maybe less of their total revenue. Right now, it's quite a bit less than 10%. But in my projections I'm going to put it at 10%. This company is really new. It's hard to know exactly what it's going to be. It's probably going to be around about 5%. I'm going to put it at 10% just for this projection. And another thing here that you guys need to understand how I'm getting my projections. So they expect to maintain an 8 to 10% share of Nevada. By the year 2025, it's about 1.52 billion in sales. And if they get 10% of that, they should be generating about 150 million in sales in Nevada. So that is a number you guys gotta keep in mind here. And also they are expecting to grow a lot next year. Analysts on average are expecting 94% growth rate. This is probably because of the Santa Ana location they're opening up in California. If they open up that location, I mean, they could almost double their sales alone off of that location. So I think 94% is actually really realistic. It's probably not sustainable unless they build a new superstore every year, which I don't think they are going to be able to expand that fast. But I mean, yeah, there's a lot of growth coming. Okay, now let's dive into the financial comparison here. This is going to be really simplified and very approximate. This isn't going to be overly accurate, but it's to get an idea of the potential you can get on your money. So the first company I want to start with is Subversive Capital. So right now their current market cap is 1.16 billion. So it's a small company right now. At least the stock market is valuing it as a small company. And so in the year 2025, the total addressable market between the trifecta states in California should be about 15 to 16 billion. So let's just say 15 billion as the TAM. I'm going to assume a 20% market share. I think it's going to be between 10 to 20, so we'll run the numbers between that. And that would be about 3 billion in annual sales if they can meet that 20% market share. And then also another thing we need to pick is what price to sales ratio do we want to choose. Planet 13 right now trades about a 13. Historically, they've traded at 6, 3, 12. They've kind of bounced over the place. If you look at other companies, some even trade at a 26 PS ratio. So it really ranges. I like to be conservative in my projections. I don't like to get overly aggressive because there always is complications within growth stocks. So to be defensive, I'm picking an 8 price to sales ratio. I think this is definitely on the low end and being very conservative, but that is how I like to do my projections. You guys can change that accordingly, what you truly believe. So I'm going to assume an 8 price to sales ratio. If we generate 3 billion in sales at a price to sales ratio of 8, that would bring the market cap to 24 billion. Yes, 24 billion. That sounds ridiculous, and I'm even shocked myself when I did these numbers. Right now, we're trading at 1.16 billion. We could potentially 20x our money over the next 5 years. Now, of course, this doesn't account for dilution. I actually think we'll probably see like 50% dilution. This company is brand new. They're gonna need to dilute shareholders in order to expand. But either way, if they dilute 50%, what is that, a 12x return in 5 years? It's hard to imagine this not happening. But of course, we might not see 20% market share. So if we only see 10% market share, which might be more realistic, that'd be about 1.5 billion in sales, 8 price to sales ratio would give us a market cap of 12 billion. That would be about a 10x return, let's say. But if we account for 50% dilution, let's just say, now it's about a 6x return over the next 5 years. I think that's probably realistic. I think that this company could return 6%, accounting for dilution and accounting for about a 10% market share. But either way, if it's 6x, 3x, 10, 20x, that's all insane numbers, and it's not even unrealistic. An 8 price to sales ratio for this company is not crazy. They're gonna have really good margins, in my opinion. I think that their brand awareness is gonna be super strong and allow them to charge a lot more than a regular company could. So yeah, I think that this company is going to like 6x, guys. This is one of my biggest positions right now for this reason. I have a lot of conviction in this industry. This space is basically recession proof as well. It's like alcohol. I mean, look at this past year. Alcohol sales are up. The green stuff sales are way up. Nothing can really disrupt this industry. It's just a product that people love, and it's a product that is going to continue in demand as it steals from the black market over time. I think this is one of the safest plays at today's valuation. But anyways, that's enough about this stock. Let's move to Planet 13. So Planet 13 is a really difficult one for me to project. I'm going to do my best, and I'm going to explain where I get these numbers. So right now, the market cap is 1 billion. So it's about the same size as Subversive Capital, actually. I'm going to assume 90% of their sales is from the green stuff and 10% from entertainment, food, and all that stuff. I think they're going to grow their revenue in this space. But either way, it doesn't matter too much. This is just approximates. It might be 5%, it might be 3%. I'm choosing 10% just for explanation purposes. So yeah, if we assume that, then we need to move on to where they're going to expand to. So right now they're in Nevada. I think that the green plant is going to bring in about 150 million in revenue by the year 2025. And that is based off that 10% market share. And that's not even accounting for tourists coming in and buying product as well. So 150 million from that. About 15 million from entertainment, food, all that other stuff. And then also if we go to California, because they're expanding into that in the year 2021, I would say that they're probably going to bring in about 120 million and 12 million in entertainment. This is one that's really hard to project. We have no idea how successful this superstore is going to be, but I would think that they're going to bring in less than Vegas. I think Vegas is going to be their flagship product. But anyways, if we combine these, it's about 300 million in sales. But this also isn't including tourists and everybody going to their Planet 13 location in Vegas and in California. That would bring their sales up a lot. And so that's what's really hard to account for as well here. So I'm going to give a few different projections. I think that more realistically, it could be between 400 to 500 million in sales by 2025. This could even be closer to 600 and 700 million. It's a hard one to predict because this company is still really new. But if we assume an 8 price to sales ratio, which is super conservative again, if we bring in 300 million, that would give us a market cap of 2.4 billion. If we bring in 400 million, that'd be 3.2 billion. 500 million, 4 billion. So we have about a 2, 3, and 4x return possibly over this next 5 years. I don't think we're going to see 50% dilution. If we saw 30% dilution, you're still getting a multi-bagger here. And keep in mind, we could actually be bringing in a lot more revenue in this. I wouldn't be surprised to see 700 million in revenue. So regardless, I think that this is, again, a multi-bagger stock. And right now it's really not undervalued when you're looking at this, and it's in a really safe industry in my opinion. I love investing in this industry. It really can't be disrupted. They just need to take market share. And I think both of these companies right now are decent valuations with a huge future ahead of them in growth. So if I had to pick a winner out of both of these stocks, I would pick Subversive Capital. I think that they're gonna have a lot more cash at their disposal. They're gonna have better brand awareness. I think that their valuation is actually a little bit better right now as well. So yeah, I think Subversive Capital is the better play, but personally, I would just invest in both of them. I think you invest in both of them, 10 years out, I think you're gonna be really happy with your return on your investment. But anyways, guys, that is the video I have for you today. This is getting a little bit long now. If you liked it, make sure you drop it a big thumbs up. Thanks for watching until then. I really appreciate that, guys. I'll see you in the next video.